Well, we had two pieces of economic data that got investors' attention this morning. First was on new home sales, which was better than expected. And we also got a pretty positive reading on consumer confidence. It rose in May after falling for 2 straight quarters. Now, as earnings season begins to wind down, we know that the COVID-19 news, like the stuff that Anjali was just talking about, and also this economic data will become the big focus for investors going forward. So for more on this, I want to bring in Jesse Edgerton, a senior economist at JP Morgan. And Jesse, you're out with a new note this morning. And it's interesting because even though we got this better than expected data, you're less confident in the 2021 growth prospects. You also said you're revising expectations for unemployment. So I'm just curious what the reasoning is for your slightly more pessimistic outlook.
Sure. I would honestly say that I think the virus is evolving a little bit worse than we had expected as of a couple months ago when we wrote down those forecasts. I think we had in the back of our mind at that time that we would go through a period of lockdown, which we did, and we would sort of emerge from that lockdown into a world where the virus felt like it was under control and people could start getting back to normal, going about their business the way they normally would. Not immediately. We always thought it would take some time, but we sort of thought that the conditions would be in place for people to start going back to movies and restaurants and the mall and things like that. And I think when we look around now, it just doesn't feel like we're at that place, right? We still see the virus spreading in some places. Certainly the number of new cases and new deaths is falling in New York every day. But those new case counts are rising in many places like Texas and Wisconsin and my home state of Minnesota. So it just doesn't feel like we're kind of out of the woods and people can stop worrying about the virus and start heading back to restaurants and things like that.
And, Jesse, it feels like you just kind of, going through my inbox every day and looking at Twitter, it feels like the conversation right now with the U.S. economy is the worst behind us. And I guess I would ask, are you guys getting that question? I mean, it doesn't really sound to me like you think it's the right time to even be asking that, but it certainly feels like that's where the narrative has gone. I don't know if you would agree or disagree with that.
Well, I actually would say that the worst is probably behind us in terms of the actual decline in activity, retail sales falling, industrial production falling, things like that. We are starting to see things like the number of air travelers going through U.S. airports and the number of diners being tracked by OpenTable at restaurants starting to move up. The lows were more like in late March or into April, and things have been edging up for a little while. But that increase has just been very tentative. Even in places like Texas and Georgia that have been lifting their stay-at-home orders, the number of people going to restaurants is still down 2/3 from where it was last year at this time. So I think even in those places, you're just still seeing people not yet confident enough to really bounce back.
Hey, Jesse, Rick Newman here. So one of the things that's interesting about those states you're referring to where the case count is ticking up is they are staying open. We haven't heard any state say, oops, this is getting out of control again. We need to start closures. So as you're looking ahead, 1 month, 2 months, 3 months, are you anticipating that there will be some forced closures or that these case counts will just continue to tick up with people still going out?
I would say we've hesitated as economists to try to do too much forecasting on what exactly the virus is going to do and how people are going to react to it. But I would say overall, what we're kind of envisioning here now over the next couple of months is this kind of patchwork of policies of different stringency levels across states, and just a world where, you can't really be confident that the virus is gone. You can't really travel to other states if you don't know what policies in place what policies are in place there, or whether you should be worried about the virus. You can't start freely going back to restaurants and movie theaters and things like that. So I just feel like we're sort of entering this new normal where, the virus is not growing explosively like it was at one point, but it's also not disappearing. It's just going to be something that people need to worry about, and it's going to keep affecting people's behavior, I think.
Jesse, I'm wondering how politics plays into your risk assessment. On the one hand, you've got the president today pointing to the market saying the transition to greatness has started, that it's time for all the states to reopen. And then yet you're hearing in some of these states that have reopened about pushback these business owners are getting from people who are saying, I'm not going to wear a mask. I don't have to wear a mask, which will only complicate this ability to bring down the number of transmissions. So, as an economist, you don't look at things politically per se, but there's definitely a political element, I imagine, to the recovery picture.
Yeah, I think that's contributing to our view here. There has been kind of a patchwork of state level policies in the absence of a cohesive federal policy reaction. And as a result, some states are opening up more than others, and then people are reacting to those reopenings in different ways across states, absolutely depending in part on their politics. And so I think all of this is just contributing to this feeling that we're just in this kind of soup of different policies and different behaviors by different people that are going to leave a lot of people hesitant to start going outside and going back to these businesses.
Jesse, over the past 2 months, it's been all about the Fed. It's also been all about the fiscal stimulus that we have gotten. My question to you is, do you expect more help from policymakers ahead? And if so, what exactly are you looking for just in order to get that catalyst that we need moving forward?
I think we almost certainly will get some more fiscal stimulus here. Our new forecast has the unemployment rate staying above 10%, at least through the end of the year. In this new world where people are afraid to go back to restaurants and things in large numbers. And I just think that is definitely going to be a recipe for more fiscal support of at least some kind. Early in this process, the Republicans and Democrats kind of managed to compromise on giving both sides what they want by funding Republican priorities like small businesses at the same time that they funded Democratic priorities like state and local government assistance. So I would kind of guess that at some point they'll put their differences aside again and be willing to write some checks. Hard to know exactly how it's going to come out, but I think there will be demand certainly for extensions of the unemployment benefit programs, additional funding for small businesses, and additional funding for state and local governments.
All right, Jesse Edgerton, Senior Economist at JP Morgan. Thanks so much for taking the time.
Sure, thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.